Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the tech sector, XLK, Apple, and Facebook daily weekly time frame. So we're still seeing a bounce play out, a little bit of follow through, not confirming these bullish candlesticks. And it's up to the tightening range here between, I'm watching the 50-day moving average and the middle Bollinger Band. We did close below the 50-day moving average to end last week, so that makes it less of an important level for me to be keeping an eye on because we did not respect that support level at the end of the week. But it is a nice job of showing a tightening range, which will show a clear break by the end of this week. So the middle Bollinger Band resistance is dropping down 52.97, and the 50-day moving average is 52.52 on the rise. So the bulls have a double low at 52.33, and that is the support that's a must hold at this point. And if we can hold that level and head back up over the middle Bollinger Band resistance, then the bulls will start to regain control of this daily time frame. If, however, we cannot get over this daily middle Bollinger Band, which has rejected the last couple of attempts to get back over it, then we will be looking to head back down and test that level again. And you better believe that the bears are going to jump all over it. If 52.33 breaks, that's such a clear level of support at this point that would indicate weakness in the tech sector and see more significant consolidation, in my opinion. The weekly time frame, you can see if we lose those levels, we lose these exponential moving averages, the bearish MACD cross gets more magnified, we would see a bearish TCG cross at that point, and it would be more significant consolidation. At this point, holding that level, the bulls are still in absolute full control of this weekly time frame. Longer term, this is very normal, healthy consolidation considering where we are coming from. It's all about 52.33 support from here and the daily middle Bollinger Band resistance. Apple is still extremely tight, and it is struggling with the exponential resistances 4 days in a row. 4 days of very, very tight range, all bouncing around the upper 140s, the low 141s, and in terms of resistance, we're looking at the low 142s. So these levels are still dropping, and it's going to require the bulls getting over these daily exponential resistances, otherwise they're going to drive them down to lower lows. So the current support I'm watching is the lowest price we've seen in those 4 days of 140.87 and then 140.06. And resistance is 142.38, the high of that 4-day range. So keeping an eye on the tight 4-day range to indicate short-term direction, which right now does favor the bears because of that exponential resistance, and we haven't even back tested and touched the middle Bollinger Band. We got really close to it, but that is key resistance as well. Weekly time frame still very, very strong. No red flags for the long-term bulls. If you're holding, for months or years at this point, there's no red flag. It would require a loss of these exponential moving averages to start to consider potentially locking in profit. Otherwise, like I said, we could pull all the way back to the middle Bollinger Band in the low 130s and still be extremely strong on the weekly time frame. Facebook, lack of follow-through as well. It certainly saw more follow-through than the Apple bulls did, but we could not confirm that bullish candlestick with follow-through. We pulled back, we closed closer to the low than we did to the high, and although we did backtest and hold the middle Bollinger Band of 140.86, so tomorrow we're going to be watching, can the bulls hold that middle Bollinger Band again? Resistance is the high of today of 141.91, and there's not many resistance levels until the all-time high. I'm looking at 142.22, and then there's the all-time high, 143.44. So the bulls are still holding on the weekly here as well. Same story as Apple. Long-term bulls are not worried in the slightest. That's a potential bull flag, and it could lead to continuation and new all-time highs if the tech sector bulls show up. So a lot of these names are positioned to continue very strong if the S&P 500 and the tech sector bulls show up, and Apple would be a lead bull at this point just because, or I should say, Facebook would be a lead bull at this point just because Apple is a bit weaker on the daily time frame. It consolidated less. It made a stronger bull run to the upside. So keeping an eye on Facebook bulls if the market comes to life, and these bulls that I keep saying need to prove it to us. If you watch the market rundown video, If they do prove it to us, keep an eye on Facebook bulls as they are positioned for new all-time highs fairly easily. Thanks for tuning in. We'll check back in tomorrow. See you then.